So today's tax question is looks like somebody who is earning a little bit extra in their retirement years and they want to know about the impact on Social Security. So I'll read out the question to you. I'll be investing in some project that will give extra $50,000 this year. I'm assuming a 50,000 income this year. Uh, will this impact my Social Security income? All right, so this is a pretty good question because a lot of people don't really plan their Social Security. They don't understand how the Social Security is taxed, what can you do to reduce that tax, and how will additional incomes impact their taxation in their retirement years. So this is a prime example of it because the gentleman is already retired and he's already collecting Social Security and now he have extra income. So in your case, obviously you are already retired. That means you have reached the retirement age. But sometimes people, might be earlier. Maybe they're in their 50s or 40s and they're planning out retirement and they're just counting on Social Security, but they don't account for other income that they might be receiving from some other sources. So Social Security is interesting. First of all, how much Social Security you can collect can vary quite a bit, a lot. I mean, people think that there's only two ways to go about Social Security, right? Like, for example, maybe you claim it before you reach your retirement age, or you claim it after you reach your retirement age, or at the retirement age. But the truth is, there are a lot of different scenarios and there are a lot of different calculations. So, first of all, you should really reach out to somebody for retirement planning so they can run some calculations for you and figure out what might be the most efficient strategy for you that will get you the most money. So that's number one. Number two, if you are already have Social Security benefits assigned to you and now you have an extra income, does that reduces your Social Security benefits? Not necessarily, because Social Security is calculated based on how much you have put into the system. It's not based on how much extra income you are earning today in your retirement years. So that's not the factor. However, your Social Security can be potentially taxed. For example, right now, if your AGI is below $32,000 for married couples, then your benefits are not taxed. The moment you go over $32,000, from I think from 32 to $44,000, you'll be taxed at roughly 50%, or could be up to 50%. And then over $44,000 could be taxed at 85,000. I'm sorry, 85% of your benefits. So the question here comes is, what is your threshold? Where are you in this picture? So let's do a practical example. Like in this case, how would they will calculate whether this extra 50,000 will be taxed? So first of all, yes, $50,000 income that you're getting will be taxed. Now, I don't know if this is a passive income, active income, investment income, all that kind of stuff. But let's just call it a regular income for now. So obviously, that $50,000 will be taxed. Second thing we will do is we will take a look at 50% of your Social Security benefits, which I don't know, what that number is. But whatever that number is, I'll take 50% of it. So let's assume for calculation purpose, the number is $20,000. So I'll take half of that, so $10,000. And then I will add it to all the combined income between you and your spouse. So in this case, I'll assume it's $50,000. So that's total of $60,000 of combined income. That means all of a sudden, now your Social Security will be taxed at 85%. That means 85% of that $20,000 in Social Security income is taxable. So that's what you want to pay attention to. So it will not reduce your benefits in any way, but it will not help you with your $50,000 extra income. However, your Social Security will be taxed up to 85%. So that's the impact. Versus if you do not have that income, then most likely, because it's we made an example of 20,000, that means you will be not paying any taxes on that social security income. So anyhow, that's I mean, I don't have a lot of facts about it, so don't rely on this answer, but that's the basic principle. That's how it works. Obviously, when we have specifics, we run through the calculations and figure that out all together. All right. If you have a tax question, definitely reach out to us or post it in the comments in the YouTube, and then I can pick them up in our next video. Thank you.